Hey guys, T3. Having a pretty good day today. I had 7 winners and 1 loser. And it turns out the 1 loser, if I'd have just held, it would have turned into a pretty good winner. That's the way it goes sometimes, you know. Typical everyday situation. But basically, what we're doing here, the dots represent on my market webs. The yellow represents the developing volume point of control for tomorrow's value area. So the value area you see right here for tomorrow, we're right at the highs of the session. This is suggesting that the auction to the upside most likely is going to go higher into the afternoon hours. So just keep that in mind going forward here on your trading. We are above, on my 5 minute here, we are above the 100 moving average, a little bit slightly more bullish. We are digesting. Really nice having this digestive pattern going on in the markets. So just something to note on your trading here. Let me zoom this out here. Of course. Let me reload it here. Okay. The Qs are not nearly as bullish on the Qs. You know, the S&Ps are right here near the highs. If you notice that white line, that represents the well, let me double check, make sure I don't have my line in the wrong spot. Yeah, that represents the 2020 Open. So on the Qs, and that's what we're fighting right here, is are we going to go positive or negative on the 2020 Open on our technology? And we're just hovering right here trying to decide which direction we want to trade going forward here in the markets. Okay. And then on the Russell, I haven't even loaded it yet. Russell this morning, we were showing relative weakness on the flip side here. So keep that in mind going forward on your trading. And oh, this represents the overnight inventory. I'm sorry. This right here is the inventory built out during the course of the day. So pretty much our trading, this right here, these dots represent the build out for tomorrow. Really, really, really super tight trading range for the Russell. So that's not that doesn't typically stay that way. And like I said, we are suggesting higher prices on the S&Ps. So if I had to bet either direction, that would be the direction I'd suggest. So, but we'll see what happens here. We have found overlapping value. Buyers and sellers have met at the 4190 area, 1490 area several times. That's the highest point to do business for the past couple days. And so far today, we are finding responsive buyers above that, suggesting there is an appetite for risk on in the Russell. Especially crude oil was catching a bit earlier. I haven't looked here lately. In the intermarket action today, I had to eliminate my above average volume on my scan. I had the other defaults the same. So basically what's happening today, Beyond had some positive comments in the pre-market session, overnight session. So it's catching the best bid of the day. Just note that the IV is so jacked right now on these options. We're not seeing the 1,400 or 4,000, 3,500% gains anymore on these options. That they're so jacked, you're just lucky to get modest 100% returns on these options. And these are the best, even with based on my scans, a dollar move on the stocks on high volume. So the best out there right now are Beyond, Berkshire, Apple, Nvidia, Amazon. Okay, these are the stocks that are outperforming today in this market on a relatively digestive mode in the markets. So keep that in mind going forward here. If you go to your charts now, your bonds catching a bid once again. Risk off. It's risk off. You see this day after day after day. The risk off sentiment here in the markets. And if you go out on the daily, you can see bonds are right up here, right next to record yields. We actually poked below 1% yesterday. I'm not for sure if that's exactly where we're at right now, but it's awfully close to a 1% yield on our bonds right now. Very, very bearish scenario on our bonds. So keep that in mind. Or very bullish scenario on our bond. Let's put that bearish the markets. At some point in time, you're just going to get it's not worth the risk, or it's not worth holding bonds anymore, and we're rapidly approaching that point. But so far, until they can get some of this news out of the way, it looks like that bid's going to sustain for a while. Okay, the VIX is having trouble making new highs here. So keep that in mind. We are in a digestive pattern at these record highs in the VIX. But what's really important to note here on the VIX, and a lot of people don't see this. Okay, this is the active contract 14 days out. Okay, we've had a 1.575% decline today in that. Okay, then the 28, then you compare it to about the 30-day out, and we actually have a bid up in a 30-day out. So basically, what we've got going on here, a situation, it's a flattening situation back into contango on these options. And in that situation, you do not want to be taking overnights or long-term positioning. You do not want to be buying option premium for long-term positioning at this point in time. I mean, this is similar to a flattening of a yield curve, basically. Basically, you go from contango to negative contango, which is also called backwardation. Okay. Well, now the pendulum's going the opposite direction. Okay. Now we're going from backwardation back into contango in the VIX futures. And once we do cross, once the 27, the 30-day out, once that actually becomes more than what the front month, then we're back in contango, and that's whenever you're really safe to start adding significant short positioning in the VXX and the VIX futures. Okay, yeah. Till that point happens, it's typically you don't want you want to veer away from shorting the VIX when you have this significant backwardation situation in the markets. So keep that in mind going forward here. There is a flattening going on here in the VIX. Okay. Another thing that I'm looking for today, the VIVIX. Okay. And this is the volatility of the VIX. Okay. And as you can see, we're right down here near our recent lows on our VIX. Okay. And if you go on the daily here, okay, and basically during the morning sessions, I actually wanted to be trading. How can I say this? Basically, in the morning hours, if you just want to use a simple fib fan, that might even help you on this. See what's going on here. During these morning hours, VIX was the volatility of the VIX was high. And in this situation, this is where you want to be taking your scalp trades, either calls or puts, because the VIVIX popping, that means there's a lot of volatility in the markets, and that's when your highest odds to make profits happen. So basically, when we came to about 1040 today, from that point on, we have a declining in our VIX. Our intraday volatility trades, you have a strong odds that you're just going to be chopped to death in your intraday trades. Okay, so keep that in mind going forward. Barring some sort of news event, you don't want to be taking even intraday trades when your VIVIX is declining and tightening up into the afternoon hours. Okay, so just keep that in mind. That's why it's better to know what time frame you want to be trading in, and at what time frame it's time to stop. In 1040 today, day trades, you wanted to stop trading that. If anything, you wanted to start selling 1040 on today. This is where you want to start being a net seller of options. Taking credit spreads. This is where you start initiating credit spreads in your options for the day as the VIVIX is starting to tighten up. So maybe that'll help you guys out in your trading. Okay, going forward here. Okay. Okay, another little trick in the trade that I want to share with you guys. This morning, United Healthcare was really gapping up, and I wanted to have a short positioning in it. Now, how do I figure that out? Okay, and basically, whenever you're coming in, it's showing on your options contracts where it's currently pricing at. The difference of the shades. So I go to the closing price, and the closing strike back, it was around 260, is right around the closing strike, and they were trading like 17, 18, $19, something like that. I can't remember right off my head. Okay, and that's what it was marking pre-market. It was like 17, $18 for these puts because they were in the money at, this morning. Okay, they were up considerably. Okay, so basically, let me think here. No, 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 no. Correction. These were trading for about 650. That's right. I'm sorry. They were way up, way down, way high down here on the opening. Okay, but this was the closing price this Friday, so I go back to that and see what that closing price was marking at. Okay, and assuming no major implied in volatility spike, that's about the price point that you want to be initiating some puts at the current market price. Okay, so I put an order in thinking because the implied volatilities were really high. I put an order in for $5 for these for my options. Okay, and I had gotten the wait 1 second here. I'll look. So I had bought the 290 options, and I got these for $5 this morning. So, and I got them right near the lows of uh, the lows of the day on these options by basically going back, seeing what the option price was at the closing thing, and then deducting a little bit for an implied volatility crush. All you can do is make your best estimate, but it doesn't hurt to even have multiple orders in. Let's say like if you're really wanting to get into this, maybe have one at you know like I said, it was 650. Maybe have an order in at 6, and maybe 550 and 5. And as soon as the first one hits, cancel the orders. So that gives you an idea how you can set up your buy orders before the market even opens. Because on that opening tick, sometimes you can really slide in there on a really low bid as the put sellers are trying to dump their positions right there on the opening tick. So keep that in mind. Sometimes you do want to have some orders running before the bell even hits. Okay. So maybe that can help you guys out in setting up on those opening day orders if you're wanting to get in it. But I had a nice little profit on UNH that started my day off today. My second trade today was Netflix, and basically it was gapping up this morning, and so it had an upgrade. It was a really nice upgrade in the pre markets. So I thought if the markets were going to catch a bid, Netflix would be an outperformer. So far today, it's really kind of stabilizing here. Basically, how I set this up, I start with my fib fans. I find the most relevant low from yesterday, and then when we gap up like this, I just start my fib fan right there and draw it out. Okay, and typically, and I also have a 100 moving average on here on my 5 minutes, but I don't like using it on the opening print. So, so I was watching this, and basically we came right down to my third fib fan this morning, and that's where I entered along, and I got a nice little scalp uh, in this trade this morning, and I had one of my typical things. I buy 10 contracts for 50 cents, and uh, for a move, and I real quickly made a $500 move in Netflix because I saw what was going on in the markets, and I wanted to be bullish, realizing that there was a news event that could support prices at this price point. So uh, that was my second trade that I had a nice little win on, and I actually had 20 contracts, so I made made $1,000 on that trade. So I had sometimes you got to have higher confidence in some trades, and whenever you have like I said, the gap up, and then so that was my second trade. Then after that trade, I really started watching Facebook here for trade. We had a significant low put in today. Typically, I draw it from back here, uh, but I saw that Facebook was one of the biggest losers yesterday, and so I wanted to have a more short-term sell signal for Facebook. And basically, as soon as we crossed below on this 5 minutes below this midline on Facebook, I initiated Facebook for a nice little responsive short sell. So I actually had 2 trades on Facebook and one on both of the trades. I didn't get rich on the trades by no means, but I did, once it tagged that 100 on the 5 minute, I did find some nice responsive selling in Facebook. Now, my first initial loser today, that was NVIDIA. We were getting a breakdown of this, excuse me, midline, short dated midline. NVIDIA was really showing relative weakness yesterday. So I was actually more bearish in NVIDIA. I should have stuck with my secondary, my primary trend for NVIDIA, but I got antsy. And basically what happened was it came down here. I initiated short positionings on the short dated, thinking that it was going to show a lot more relative weakness versus the market. Well, I was wrong. It came right back up to the highs. I actually stopped out. That was my big loser for the day. I only had one loser. And then it chopped around here. And a little bit later, I took NVIDIA again for a secondary put trade. Once we broke the once we broke this candle here, I actually initiated a put again in NVIDIA for this scalp here. So I got most of my losses back on NVIDIA on this little move right here. But we were passing past that 1045 area, and that's when I was seeing a breakdown in the VIX. That's why that was my last trade for today, or the VIVIX, VVIX. Once I started seeing the VIVIX coming in, falling, I decided this would be my last trade for today, and because it was going to become a chop fest for the rest of the day, in my opinion. And pretty much that's what we're seeing. And so, like I said, this point on, this is where you want to be a put seller, or a put or call seller, option seller. For the chop fest, you can sell out of the money contracts post 1045 today, and probably reap some pretty nice IV crush going into the and especially if you get the right side of the trade, you can get a double benefit selling premium into the afternoon session, in my opinion. Okay, that's just my ideas I got here. Like the video if you like it. I'm hoping I helped you guys in your trading. Please make some comments. I do like a lot of your feedback. It's really important to understand, to put all these tools in a time frame and understand when, at what point in the market changed and flipped. And 1045 today, everything in the market flipped, and you shouldn't be buying options at that point on unless we see a change in the VVIX. So, okay, thanks a lot, and I will see you tomorrow.